Stephanie Lucierette, want to say hello, tell everyone where you're from, your business, and what you're interested in learning today.
Hello, I actually work with Caterpillar. I'm in Massachusetts. Just kind of curious. I know I have a lot of friends that work in commercial construction, and they're starting to see jobs being put on hold. So I'm just kind of curious on what advice and insight you have to offer.
Awesome, thank you so much. Lucas Taylor, want to say hello, and Robert Peterson, you're up. So want to say hello and tell everyone where you're from, your business, and what's in your mind.
Yeah, from Santa Cruz, California. Just here to see what you have to say. I've listened to you, met you several times, and I'm always intrigued with what you have to say. So you can never stop learning.
Thanks for being here. I appreciate you. How about Aaron Stubbs?
Hey, I'm from Tupelo, Mississippi. And just my dad sent me the link. He listens to you a lot and reads your emails. And so I'm here.
Awesome. Well, thanks for coming. So we are going to try to have a conversation today about how to manage in this weird world we're living in. So without further ado, let me make sure the slides are up. And let's go. Hold on. Sorry, I've got my computer's acting up a little bit on me. We are almost there, folks. I apologize. And let's start. So, one more button or two here, and we'll be good to go. Sorry for the delay. And here we are. How do you manage in, well, what has been and may not continue to be a rising rate interest environment? I think a lot of you know about myself. I love the ARA community, happy to be a part of you. So I'm not going to spend too much time digging into my background. A question for everybody. Where will interest rates be in a year? Anyone have any ideas where interest rates will be in a year? I'd love to hear your opinions. If you have an opinion where you think rates will be in a year, why don't you just speak out? Well, as no one's volunteering, I'm going to guess your answer is you don't know. And that's the truth of the matter is I don't think anybody really knows in this quirky economy we're living in where interest rates will be in a year. We are living through, friends, a confusing and bumpy economy that's hard to read and hard to understand. We are living through what I call the great era of COVID dominoes. The world is changing so quickly and evolving in such a different rhythm that's hard for anyone to understand. There is no time in history that I'm aware of where governments around the world, including our own, literally printed trillions of dollars to keep people alive, to keep people off hunger lines, to keep banks solvent. And while we might have overcorrected by 20 or 30%, you could debate that, we did what we had to do to keep the world going and moving forward. But now that influx of cash is creating political, social, economic, health issues that are moving around like dominoes. It should be no surprise that there's high inflation. It's all, but what that means and how quickly it'll settle down and where rates will go and all this, it's very, very difficult to understand. And in some ways, we just have to manage through the chaos and the uncertainty, which is easier said than done, but that is in many respects our job as leaders. If you think about it, we're all running businesses, and running businesses in some respects, as our job as owners, is like running a football team. And a good football team has good offense and defense. And one way to think about the health of your business is to look at your balance sheet. One important question I think we should all be asking in these uncertain times is, what liquidity do we have to cover potentially worst case scenarios? And change also brings opportunity. What opportunities are around the corner, and will you be ready to take advantage of them? And are you structured appropriately to take advantage of the opportunities? These are the things that I think every business owner and entrepreneur should be think about today. So what do you do and how do you get prepared? One thing I always say is, this is critical always, but maybe especially critical now. Make sure your financial statements are healthy and your bookkeeping is in order. The worst case scenario, and what makes me so fearful, was when I meet businesses with bad bookkeeping and bad accounting. It is almost like going to a basketball game and watching the players run around the court with your shoelaces untied. That will likely make you extremely nervous. That's how I feel when I meet business owners and entrepreneurs who are running their businesses in the same way. Don't run around the field with or the court with your shoelaces untied. The question I have for each of you, and I'm going to ask you to answer in polls. Please answer honestly. Are you comfortable that your financials are complete and accurate through April 2023? Please say yes or no in the polls. Are you comfortable that your financials are in order through April 2023? Alice, do I need to hit submit or something?
You can click end poll and then share results.
Yeah, for some reason it's not working on my end. There we go. Now I'm seeing it. Okay. Are you comfortable that your financials are complete and accurate through April 2023? I'm happy to see that 92% of people said yes, and 8% of people said no. If I'm a betting man, it's not as good at that. Pay attention to your financials. If you get into a situation where you need to go to your bank, or you need additional liquidity, or you need additional money, and your financials are a mess, it will be much more difficult. How healthy is your relationship with your bank? This is another part of an important thing in a business, in an environment that we're living through. There are, from our experiences, 5 components to a healthy banking relationship. One is, are you with a sound financial institution? How do you tell? How do you check or know if your bank is healthy? One thing you can do is, there are 2 resources on the web, and we will give you folks the offer. Just click a QR code and we'll be happy to send you all these resources. One is Weiss Financial Ratings and another is Bauer Financial, where you can go and you can check on the health of your bank or credit union. Bauer Financial will give you a star rating for your institution. Important to see. 4 and 5 are probably fine. Anything under a 4 should be worrisome. If you want more detailed information than the free information, they will sell it to you for a price. Weiss Ratings will give you a grade, bank a grade. And you can see on the side of the screen the ratio that some banks get A's, most get B's. But if your bank is in a C or below, that is definitely something to give you pause. Weiss Financial will dig in further and tell you about the overall health of your bank. Friends, have a relationship with your bank, deeper than just your business development offers. How strong is your relationship with your bank? Some people have a relationship just with a manager. Some people have relationships with multiple people. And some people are geeks like me and they have their bank CEO phone in their cell phone. How strong is your relationship with your bank? Please take a minute and ask this question. How strong is your relationship with your bank? And from what we are seeing, Ali, you tell me for some reason it's not letting me hit the button. Oh, there we go. It seems like most people have relationships with multiple people at their bank, and this is extremely important. Remember that sometimes relationship managers move around, and this is not a healthy thing. You need to know more than one person at your bank. Be transparent with your bankers. If you want to know if your business is getting into some kind of hot water or you see it coming up, it's much better to let the bank know that in front of the curve than instead of behind the curve. Finally, you want to be in your bank's sweet spot. Sometimes we meet businesses whose businesses are really outgrowing their banks. And sometimes we meet businesses who are in a bank that's so big that their bank really couldn't give a hoot about them. You want to make sure that you are in your bank's sweet spot. Banks are also here for access to credit. You're giving your banks your deposits. In exchange, they should give you liquidity and a term loan. I hope all of you have a line of credit. Is your line of credit, we're going to put in the poll, either less than 10% of your top line sales or nothing, or greater than 10% of your top line sales? Take a minute and share the size of your line of credit. Thinking that line of credits are there like for insurance and to manage for the unexpected. What is the size of your line of credit? Now it's weird, it doesn't let me hit submit. I'm not sure why, but there we go. We're about half and half. I always like to see as a thumbnail line of credits being around 10% of your top line sales. But you have to be careful about with lines of credits, though, is what they're there for. Lines of credit are not there for buying yachts, houses in Hawaii, things like that. Lines of that credit are there for seasonality, working capital, and emergencies. People get in trouble when they use their line of credits for the wrong thing, and I encourage you to be careful about that. Sometimes you can debate whether you should have an asset-based line or a line of credit. An asset-based line will be a line that the amount you can borrow will change, but it will be at around 85% of your AR and 50 to 60% of your inventory. And sometimes if you are in a capital intensive business, as some of you are in the equipment space or maybe in big party stores, it might be worth it to check which is better for you. Liquidity is like insurance and particularly important in a rising interest rate or bizarre economic environment. The other thing about debt is you should always, in my experience, think about maximizing your cash flow. I always argue that monthly payments are more important than APR or the rate that you're paying. You want to have the lowest monthly payment to give you the greatest possible flexibility. And not all the times, but sometimes the SBA, even though the rates are higher these days, is still a great tool to refinance your debt. One example is an employee benefits consulting company that accumulated 1.6 million of short-term debt, primarily in software leases. That was costing them $100,000 a month to service. They were able to refinance it with a 7A loan, dropping their payments to $21,000 a month on 10-year duration with no prepayment penalty. That extra gave them almost $1 million in cash flow for the first year, giving them more flexibility, the ability to handle market downturns, and have additional cash flow for growth. The manufacturing business had a $2 million mortgage on their property, paying $13,700 a month. They also had $1 million of loans against equipment on a 5-year note, paying $20,000 a month, creating a monthly payment of $34,000. If they refinance both notes into a 25-year loan at SBA at 9.5%, that would bring their debt service down to $26,000 a month, creating cash flow savings of almost $100,000 a year. What's relevant about this example is that because 51% of the project is real estate, you're then able to amortize the entire loan into 25 years. It's a little note that's important about refinancing. An equipment industry case is a rental company that's focusing on construction equipment, lifts, drills, excavators, skid steers, etc. It's a family-owned business that had been around for 20 years and currently has 3 locations. They're around $5 million in top-line sales and have been historically profitable. Their fleet value is in excess of $6 million at initial cost and aging. What do? They currently have $3.3 million of current debt, $2.3 million of equipment debt, and $1 million in idle and partner buyout loans, the monthly debt service of $98,000 a month. Our proposed solution to them was a $2.2 million 7A loan, $1.5 million to refinance current debt, and another $500,000 to $600,000 for new equipment. This proposed debt service of $72,000 would give them savings of also $26,000 to replenish some fleet at a lower age and meet customer demand. Would you do this deal? Yes or no? Would you do that refinancing? Take a minute and please answer the polls. Would you do this deal? Tell me whenever we have the results. Most people would do this deal. There may be opportunities to refinance your debt and improve your cash flow. There are 3 big myths about SBA lending I want to share. Some people get tricked into thinking that the SBA lends money. Well, the only time the SBA lends money is the idle program. But historically, and its ordinary course of business, the SBA is a government guarantee program designed and encouraged to let some banks and non-bank lenders make riskier loans than they otherwise would. The other big myth about SBA lending is that it's SBA, S stands for small, so it's only for small businesses. Well, that's not the case either. While I've seen SBA loans as small as $1,000, you get up to $5 million for partner buyouts, working capital, and acquisitions. And if it's an owner-occupied real estate project, you can go to $12.8 million. And if you slap a solar panel on that sucker and call it green, you can go to 25.6. The third place people get messed up on SBA loans is their bank tells them that they're not qualified and they think that's it. Well, that's not the case either. There are about 2,200 lenders who do SBA loans. Every one of them does it a little bit differently. And sometimes you have to kiss a bunch of frogs before you meet the prince. The primary benefits of SBA lending are longer term than traditional bank loans, less collateral requirements, and SBA lenders are cash flow lenders. And now, my friends, I want to open the floor to questions and also put up the slide if anyone wants to get any further information or the slides from today. If you have any questions or thoughts as a follow-up from this conversation, I'd love to hear them. Carl Milburn, is your hand up? Okay, well, something's in the chat. Let's see the chat. Oh, there's the QR code. Why don't we do this a little bit differently, because it might trigger some kind of a conversation. And ask each of you, hopefully you learned something helpful for today. So maybe we'll start with Ryan Herring. Ryan, do you have any one thought that you're leaving this from this today? Can't hear Ryan. Okay. How about George Lemire? George, any thoughts from today? We do this like help.
No question, thanks. It was interesting.
Oh, great. Robert Peterson, how about you? Any thoughts as you've listened? to all
Yeah, a
this
couple of
today?
things. I've used the SBA for, a couple of different things over the years. The last one was some real estate purchasing. The only thing my experience is that how much they want as far as personal guarantees and assets that they require. And then sometimes it's very difficult to finance other loans with SBA taking the primary position on things and having them release that to get other loans. But I did learn something today about that 7A that I'm definitely going to look into, since I'm already committed to the SBA on a couple of different things. I'm going to look into that to put together some other loans that are outstanding and see if we can put something together. I'll be talking to you about that offline.
Awesome. Again, SBA is not the perfect scenario in every solution, but it is a scenario that in my opinion, should be considered as you evaluate the different options and the alternatives. Primarily because of the longer repayment schedule, especially in this environment. Travis Schaefer, any thoughts on your end? And you're on mute, buddy.
As along the lines of the last one there, that was an eye opener, because the numbers that you had put up there was very similar to what I was looking at, and it put it into light about consolidating actually through the SBA on that type of a loan. I wasn't aware of that, so that was beneficial.
Good, terrific.
Thank you.
Anybody else? Let's see, Ryan Herring, your speaker's on. Any thoughts for us today? Ryan, Carl, Miranda, Stephanie, Travis, I don't want to push you, but if anyone has any questions or thoughts that they want to talk about, please feel free to share.
I got one for you. If we're looking to increase our line of credit, is there any, good presentation or tidbits you've got on that?
Just have your financials clear and in order, a good package, and remember that banks are hungry for deposits today. So go to your bank and ask them about what's going on, and tell them that you're taking this out to a couple banks and you want a good line of credit, and see who's willing to give you the best one. Keep in mind that banks should also be, for excess deposits today, be paying your interest. So it's a fair point to look at your banking relationship holistically. Any other questions, thoughts, ideas, suggestions? Anything you got, we're all ears.